Time now for an in-depth look at the market news. And for that, I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me.
Let's begin. So on Thursday, China announced that it will have tariffs on some $75 billion of American imports from next Friday. Following the announcement, U.S. stocks skyrocketed on Thursday. Can you tell us more about that?
Sure. The retaliatory duties on some U.S. goods will be cut from the 10% to 5% and from 5% to 2.5% on others, according to the statement from the China's Ministry of Finance. The adjustment would take effect from February 14th, it said, without specifying which time zone it will be referring to, as it's announced as 1 p.m. The statement said that move was made in order to advance the healthy and stable development of China-U.S. trade. China said that the next adjustment will depend on how Sino-U.S. trade ties evolve, adding it hopes to work with Washington to completely eliminate all tariffs increases. As you said, the total amount is expected to be about $75 billion worth of goods. Clearly, this is a positive indication as the direction of the trade is moving positively. I think that this is happening because this coronavirus impact is quite negative for Chinese economy, and China needs U.S.'s help. And I think that the situation is that in terms of negotiation, in terms of trade, we think that it will move in the right direction, where the both countries will be working closely together to help out each other as continue to support the global economic growth rates.
Well, that seems to be some good news. Now let's turn to the local market. As you've said, U.S. stocks staged a massive comeback this week, recovering their losses from the coronavirus scare. Now, what do you think about the market situation here in South Korea?
Right. I think that Korean market also recovered quite nicely, but today it is falling by about 0.7% for Kospi. Kosdaq is flat. And actually, in terms of the movement of the stock prices, Kospi was one of the worst performing indices relative to other global indexes. The reason for that is because Korea's dependency on China in terms of production as well as consumption. So that is actually putting some negative dent to the performance of Korean equity market. As you said, U.S. market has recovered, and actually it is hitting the record highs. It continues to rise to show that their dependency on China seems to be relatively less. And also, they've been competing with China on the various other industries, where most people are now thinking that U.S. will win this U.S.-China dispute in terms of trade. And they're competing for the next generation of fourth industrial revolution eras. And clearly, U.S. is in very good condition. So that is positive news for U.S., but in terms of whether that will have a positive impact for Korea, that really depends on how Korea changes from heavy dependency on China to probably diversify in terms of the production as well as consumption.
So we still have to wait and see. What is the status of the exchange rate and global oil prices today? How do you expect the figures to unfold in the near future?
In terms of the Korean won, it has continuously depreciated just along with the Chinese renminbi. It was as low as 1160 territories. Now it is back up to 1187.3. So it has depreciated by somewhere around 3 to 5%. Now, the reason for this kind of move is, as clearly I said, Korea's dependence on China. That actually affects negatively in terms of the currency movement. As for the oil prices, also, it really fell quite sharply from $65 territories because of the Iran incident to now as low as it went down to below $50. However, though, it seems to be stabilizing above 50, now currently trading at $51 or so. The reason for this volatility is really related to the supply and demand. China is one of the biggest buyer of oil from global producers. And if that demand goes down by 20%, obviously that will have a negative implications. So therefore, the production cut is expected, and they are coming through. OPEC is deciding on that as well. And also, because of the shale production, it can change any time by U.S. So therefore, oil price might be stabilizing at around $50 to $55 territories. All in all, we think that the currency as well as the oil price should be in a range bound, not to depreciate that much, probably not above to 1,200 level, but probably stabilize at around 1150 to 1,200 level. As for the oil prices, probably stabilize anywhere between 50 to 55.
All right, Mr. Yu, we'll have to leave it at that place for today. Thank you so much for sharing your insights, and have a great weekend.
Thank you very much.